Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after returning from the public holiday in observance of the Queen's mourning, the central banks in Europe and also in Asia raised their interest rates after the US Federal Reserve made another big rate hike and signaled that there were more to come. The Bank of England raised its key interest rate by another half a percentage point, while the Switzerland Central Bank raised its benchmark lending rate by its biggest margin to 0.75% or 75 basis points, and said they couldn't rule out more hikes. Elsewhere, Norway and the Philippines also raised their interest rates. Early on Thursday, the US Federal Reserve raised its interest rates by a further 75 basis points, intensifying its fight against high inflation. Along with that, Fed said there was further pain to come, with the market now viewing 2.5 to 3.25 rise in interest rates. They are now pricing in by the end of the year of around 4.25 to 4.5. After the rate hike, the market was very whipsawed for the Australian dollar as it whipsawed around the 66 handle. We can see here that the market did take a challenge lower after the recent key level was breaks around that 66.80 level and posted a fresh low around 65.70 or a 2-year low. From there, the market is actually still looking somewhat negative as the trend is still bearish in terms of reviewing the ADX, and therefore could see further pain for the bulls as the bears weigh heavily on the market and therefore look towards the region of 66.30 and maybe with the objective still remaining at 64.80.90 due to that recent break that, as I mentioned, of 67.80. The euro was also relatively whipsawed as the dollar index, which measures the greenback strength against a basket of 6 major currencies, rallies on to a high around 110.5 to 110.90, a fresh 20-year high as that. Along with the decline in the euro, the market is still destined to the target of around 96.40.80 and therefore could see further weakness in today's coming session due to the recent break of 98.80 that confirmed the downside signal. The dollar yen was very, very volatile after there was possibly reports that the Bank of Japan may have intervened. The reason why I say that is if you look at it on the hourly chart, the market from the highs of 145 aggressively dropped 5 big figures and therefore is still a little bit nervous in how to proceed the next move. In light of the pattern, I am looking for further weakness, and from the call of that topside rejection is that we are looking down towards possibly of 41 down to 139.5. So with the Bank of England hiking its rates, we can see that the pound is still remaining somewhat negative and still looking towards its objective of 111 to 112 now. I feel that when we get closer towards that bottom side of the range, could see some good strength or good demand returning to the market. So I don't want to be caught short at the bottom of the range as the RSI is also oversold. Gold, well, the market just can't seem to take out that topside level around 1,678.82. And failing that for at least 5 attempts, the market is still pretty much poking at that topside level with the RSI rising with the MACD. Nevertheless, unless we see a weaker play in the dollar, which doesn't look like it's going to happen anytime soon, the risk is still towards that bottom side, an objective of 1,635 to 42. But if we do see a break at a close of New York above 1,682, then 1,711.13 is on the cards. Wrapping up with oil for the market since that rejection of that top side, which comes in somewhere around 86.50.60 and above at 88.40.50, keeps the negative price action in play, and that is towards an objective of $81 after recently looking there was rejected. Nevertheless, we're still seeing good rejections from that top side, and with a stronger dollar, does weigh on oil somewhat. Let's see if the market does continue its decline into today's session. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the day.